Welcome back. Raubex has delivered upbeat profit growth. During the annual period, the group delivered a 21.3% jump in headline earnings per share. This was boosted by a strong order book as tender activity ticked up. And joining me now with further insight on the performance is company CEO Felicia Msiza. Thank you so much for your time. Felicia, let's dig into the growth momentum that Raubex saw during the period, even though you mentioned a slow start to the year.
Thank you, Zinati. So we are pleased with the results that we've released this morning for the year ending 29 February 2024. And we're quite excited because this is against the backdrop that we are actually celebrating 50 years of operational excellence and growth. I mean, if you look at the results that we have actually released, this was actually achieved against the backdrop of some of the challenges that we have faced as a country and again as an industry as well. And the last time we spoke, we actually said that Beitbridge border post is not included in the numbers because we completed that project last year. So these results are actually testament, in terms of the adversity of the group. And the two biggest contributor to these results is our Bauba resources. We had an improved production at Kwakfontein mine. Both our north and south pits have actually done completely well. And then Western Australia, obviously, we continue to gain market share in that environment.
Felicia, you mentioned the Beitbridge border post numbers that, of course, were included in the previous financial year, but not here. So can we expect that comparison to be completely worked out of the base by FY25? But I also understand that there is some maintenance that you are doing there, and how much of a boost can we expect from that?
So yes, that's correct. So the project, it has been completed in the previous financial year. We are executing the maintenance project. It's a 17-year maintenance project at a value of 1.5 billion rands.
All right. Well, thank you so much for laying out that for us. Now, let's actually zoom into the different divisions. You do mention, obviously, the strong performance that came out of Babua, but I mean, there are a number of challenges in the mining industry at the moment. You have pricing headwinds, input cost pressures, logistics and electricity constraints. Is your materials handling and mining division just shrugging off these challenges?
So if we start with the materials handling and mining, you're quite correct. I mean, our performance, we benefited from a very strong chrome price, and also we benefited from, the exchange rate as well in terms of the dollar versus the rand. So that actually really helped us. And obviously, we have also increased our production, as I said, at the Kwakfontein mine. So the efficiencies in terms of production in the mining industry, they've actually performed well. But other subsidiary companies within the division, for example, our BNE International company, we're busy in Namibia at the Namdeb mine. We've got a 5-year contract there. And I must say that we are doing very well. And the guys there, they're really outperforming themselves. We've also seen a demand in bentonite from our OMV subsidiary company. So in a whole, the materials handling and mining division has done extremely well. When we look at the other divisions, roads and earthworks, again, in terms of execution of the current key projects that we have, particularly around the N2, N3 KZN corridor, those projects are running at full steam. We're doing very well. Our project in Lesotho, Senkwi River Bridge as well, is performing very well. So roads and earthworks as well, in terms of execution, they have done extremely well. Looking at construction materials, we're also doing well. We've seen an increase in terms of materials. Our volumes have uptick during the second half of the financial year. We've seen an increase in terms of asphalt and bitumen, and we really believe that this division is going to, shoot the stars in terms of the work coming out. Lastly, our infrastructure division, we're doing exceptionally well. Our housing projects are progressing quite well. We're also pleased that we have actually signed off two of the renewable contracts to a value of 1.7 billion rands around two wind farms. We are going to finalize the next one in the next couple of weeks. Obviously, Western Australia reporting in infrastructure, we continue to gain market share.
Of course, I think this is a trend that we're seeing. You're getting these highlights, but also some pressure points. And I actually now want to zoom into, roads and earthworks there. You do mention that there has been a slower rollout of tenders by Sunrail. And I'm just, wondering then how much growth runway that division does still have even with that.
So if you look at the order book of the roads and earthworks, so it's quite diversified. Obviously, Sunrail still remaining significant. And also we've got concessionaires in there in terms of the N3TC, the Bakwena and Trek. So when we come to Sunrail, obviously from last year, December, January this year, they advertised a lot of work in the market. And I must actually announce that we have received a couple of awards from them, totaling about just below 4 billion rands, Zinati. And again, on the concessionaire side, we have received some work. And I must say, on provincial governments as well, we are doing significant work on the Western Cape province and also around other provinces, as I said, KZN and also Free State. I mean, they've been quiet for quite some time, but they are back. We've got 2 contracts with them. So currently, I mean, where we're standing with Sunrail, we are expecting a significant amount of work, not only for Raubex, but for the entire market because of the tenders that they've actually committed that they will close and they will award to the market. So we're excited about that.
All right. Felicia, we have run out of time, but I'm stealing about a minute. I want to go into the construction materials division. The financial metrics look good there, of course, as you've mentioned, but there seems to have been obviously a mixed picture when you look at the different operations. And I'm wondering if there are pressure points that you are seeing in asphalt and bitumen, and if those are structural.
So if you look at that division, Zinati, it's been affected by some of the challenges that I mentioned earlier on, particularly our quarry business. Load shedding in FY24, it was significant, so it affected actually our margins. Also, the increase in input costs. I mean, obviously, if you're running on generators, the price of diesel also increases as well. So we had to spend more in terms of diesel. And lastly, obviously, the adverse weather and climate, particularly around KZN and Western Cape, has actually delayed, some of the margins that we would have seen, which has been pushed into the new financial year.
Just lastly, Felicia, about 20 seconds. Are there election-based risks or green shoots that you have seen or are foreseeing so far?
Look, I think it's been business as usual from our side. We've been very happy in terms of, the commitment around infrastructure in South Africa. So we don't really believe that this hype in terms of work, it's more around the elections that are coming up. So we just continue in terms of the work that we have, we execute.
All right. Well, thank you so much for your time and giving us those insights. Appreciate it. That was CEO of Raubex, Felicia Msiza.